Hey everyone, welcome back to the Crypto Code. In this video, we're breaking down a headline that's quietly bullish for Bitcoin, why it matters for one of the biggest Bitcoin-linked stocks in the market, and the macro wildcard that can still inject volatility into both stocks and crypto. Let's talk about it. Before we jump into today's topic, we want to remind you that here at the Crypto Code, our goal is to provide you with the top news, research, and tips when it comes to finding projects with huge profit potential. Stay to the end of this video and learn how you can earn $10 in Bitcoin and a free weekly trade alert just for attending one of our free workshops to learn more about who we are and what we do. No purchase needed. Our trade alerts have a 93% win rate, so make sure you take advantage of this free alert. Remember, I am not a financial advisor. This is not financial advice. So do your own research before you make any crypto trades. Okay, so the headline is this. MSCI has indicated it will keep digital asset treasury companies eligible for its indexes for now, rather than pushing them out. Now, if you're wondering, what is MSCI? Here's the simple version. MSCI is one of the biggest index providers in the world. They run major benchmarks like MSCI World and MSCI Emerging Markets, and a lot of ETFs and funds track those benchmarks. So when MSCI changes index rules, it can matter because it impacts passive money, funds that buy and sell automatically based on index inclusion, and that's why this update is important. When the market hears these companies stay eligible, it translates to something very simple: less risk of forced selling and less structural pressure. Now, the company most people associate with this is MicroStrategy, now branded as Strategy, or ticker MSTR. And what is Strategy? Historically, it's a business software and analytics company, but in recent years, it became famous for something else. It built a Bitcoin-treasury, meaning it holds a very large amount of Bitcoin as a core asset. So for many investors, MSTR trades like a higher volatility proxy for Bitcoin exposure inside the stock market. Here's where MSCI ties in. When a stock is included in widely tracked indexes, it can benefit from ongoing rules-based buying. When it's excluded, the reverse can happen. Index funds may have to sell regardless of whether the company is good or bad. It's mechanical. And the concern is that Bitcoin treasury style companies could be treated more like investment vehicles than operating businesses, which could make them candidates for exclusion under certain index rules. If that ever happened, you could get sudden forced outflows, exactly the kind of selling pressure that can hit hard and fast. So MSCI keeping the door open, at least for now, matters because it removes a major overhang and helps prevent that passive flow pipeline from turning into a headwind overnight. Now let's zoom out because this isn't just about one ticker. The bigger takeaway is structural. Traditional finance is learning how to classify and handle Bitcoin exposure. That's meaningful. It signals that Bitcoin isn't just trading on hype. Real decisions are being made in the plumbing of markets, index rules, benchmarks, passive allocations, and how institutions decide what belongs in standard portfolios. And if companies like Strategy remain index eligible, three things follow. First, passive flows can continue in the background. They're not flashy, but they're consistent, and consistency matters. Second, it keeps the corporate Bitcoin-treasury playbook looking viable, which could encourage more companies to explore it over time. And third, it reinforces the idea that Bitcoin exposure is becoming more normalized inside the system, less like an outsider asset, and more like a standard allocation conversation. So yes, this is bullish in a structural sense, not because it guarantees prices will go up tomorrow, but because it reduces a risk that could have triggered forced selling. Now, this also connects to the broader crypto market. When Bitcoin gets a narrative tailwind, it often sets the tone, and that confidence can spill into majors like Ethereum, XRP, Dogecoin, and Cardano when risk appetite is improving. But we also want to stay grounded. Crypto can move hard in both directions in short windows. A pullback doesn't automatically break the bigger picture if the long-term drivers remain supportive. Things like institutional access, ETFs, and continued integration into traditional market rails. Now let's talk about the macro wildcard because this is what can still flip the mood quickly. Markets regularly reprice around tariffs and trade policy uncertainty because tariffs affect costs, profit margins, supply chains, and inflation expectations. Basically, the overall risk environment. Here's the simple framework. If markets start pricing in tariffs easing, that can be seen as cost relief, often supportive for equities. If markets start pricing in tougher tariffs or more uncertainty, that can mean higher costs and more risk, which can bring volatility back quickly. And crypto doesn't live in a bubble. When macro uncertainty spikes, correlations can rise. Stocks and crypto can move together in the short term, even if their long-term narratives are different. So the smart approach is to expect noise around macro headlines. Don't get emotionally whipsawed by the first move. let the market react, watch how it settles, then look for confirmation. All right, let's wrap this up. MSCI keeping digital asset treasury companies eligible for its indexes reduces a real structural risk, and that matters not just for MSTR, but for the long-term normalization of Bitcoin exposure in traditional markets. And at the same time, tariff and trade policy headlines remain a key volatility trigger that can hit both stocks and crypto. Now we want to hear from you. Do you think this MSCI decision is a bigger deal than most people realize? And on tariffs, do you think the market shrugs it off or does it become a bigger catalyst? Thanks for watching the Crypto Code. If you found this video helpful, please like, subscribe, and hit the notification bell for more crypto insights. Let me know your thoughts on today's video in the comments below. You can also check out what we do here at the Crypto Code by registering for one of our free workshops where we show you how we and our students profit in crypto no matter if the markets are up or down. If you register for the workshop, you also get access to a free weekly trade alert. Attend our free workshop, take a short quiz at the end, and we will send you $10 in Bitcoin. No purchase needed. We have already given away hundreds of thousands of dollars worth of Bitcoin just this year alone. Just look for the link in the description of this video to register for the workshop. It will be worth your time. Our public trade record currently has a 93% win rate, and you can view it here. Best of luck with your investments, and remember to stay informed and stay safe in the crypto world. See you next time.